Good morning and welcome to Optimum Solutions webinar about manually calculating federal income taxes. My name is Susan Warren and I'll be your presenter today. Sherry Dwyer is also with me. She's going to be driving for me and changing the screen. We're going to talk to you about some pretty important payroll information today, and that's calculating federal income taxes manually. A lot of us ask, is that really that important? But we're going to show you today that it is a very important function of payroll. Does your phone ring a lot this time of year? Year-end is, of course, a very busy time of year for us all. But it's the time of year when we, your support team at Optimum Solutions, get lots of questions about how to prove to employees that the taxes that have been deducted from their checks were correct. But you should also understand how to make that calculation and the information that you need for that calculation and how to perform the process that's involved in the calculation, both the manual process and the computer process, and be able to answer any questions that your employees have for you about that process. So that's pretty much going to be our agenda for our webinar today. There are quite a few reasons why you need to understand this calculation, how to manually calculate federal income taxes. And those include proving the calculation that's done by perhaps a new computer system or maybe an upgraded computer system. You might need to check the calculation after you've updated a new year's tax table, or you might need to prove to an employee that his or her taxes that you've been withholding have been correct. Now, have you ever had an employee come to you and say, you took too much taxes out of my check? Or this is my favorite one, my wife says you took too much taxes out of my check. I've heard that one before. Or an employee comes to you and says on April the 15th, I owe the IRS money. So you didn't take enough taxes out of my check. Well, you might need to get the employee's W-4 that we're going to talk about in just a few minutes and sit down with that employee, show the employee the filing status and the number of exemptions that they elected, and manually calculate for that employee why the taxes that have been withheld were withheld. The information that you need for the calculation consists of a couple of different very important things. And the first one of those is the Circular E. And the Circular E, of course, is also known as IRS Publication 15. And that provides guidance. It contains the actual tax tables that you'll use. The other very critical piece of information that you're going to need for this calculation is the employee's pay frequency. Like all computer payroll systems, your Optimum payroll applications use the IRS annualized tax tables from Circular E. Now let me tell you that if you use the actual tables instead of the percentage tables and perform a manual calculation, your result could be off by as much as $20. So you always want to use the annualized tax tables, the percentage table, to do your comparison to your computer calculations. And as far as the frequency, Our example that we're going to look at this morning is going to use a pay frequency of biweekly. Here's an example of a federal Form W-4 that's going to tell you the employee's filing status and number of exemptions that they've elected. You probably have your employees fill out this form when you onboard them. This is probably part of your new hire packet. Our example that we have today, it might be a little small for you to read, but this employee has elected single with one allowance. And this information indicates how you should read those tax tables in Circular E. There are a lot of things that you should know about Form W-4. One of the most important is that if an employee has taken a pen or pencil and done any strikeouts on this form, if they've marked through anything or not signed it appropriately or changed anything, then the Form W-4 has become invalid. And until you get a valid, signed and dated Form W-4, you should withhold at single and zero. So they're not allowed to make any changes to this form. Then it becomes an invalid form. If an employee should mark married but withhold at the single rate, then you would use the single table from the Circular E or Publication 15. They can be married but withhold at a higher single rate and have more taxes withheld. And one other thing to be aware of is line 7 on Form W-4. They can choose to mark exempt on line 7. And if an employee marks the exempt line on Form W-4, you would choose the appropriate indicator according to your Optimum Solutions platform. Now in version 6 on the tax screen for the employee, you would mark 99 exemptions. In version 7 on the tax screen, you would mark an X for their tax status. And in the Windows application, there is a box 7 exempt tax indicator. So if Form W-4 line 7 shows exempt, there is a special indicator on their tax setup in the employee master file to indicate that. Now that employee's wages are still reportable on their W-2, but you would not be withholding taxes per the employee's Form W-4. The first thing that you're going to calculate in the tax calculation is going to be gross pay. Now gross pay can be hours or units times a rate, or it can be a flat amount, which would be the case for probably a salaried employee. The gross pay that you'll see us use today in our example is going to be $1,963.58. Once you've got your gross, you'll take other items into consideration. The first thing we'll look at today is any non-taxable earnings. Now, you may or may not have all of the items that we look at today. We're showing you lots of different scenarios today. In our case, we do have some non-taxable earnings. An example of non-taxable pay codes might be reimbursement of expenses like mileage. That wouldn't be taxable to the employee for federal income taxes. The taxability of earnings codes should have been set up when the earnings codes were originally created, which was probably a long time ago. But that's always a consideration when you set up a new earnings code. Today, in this webinar, we're concentrating on federal income taxes, but always check with state and local tax agencies to see about non-taxable wages when you set up any new earnings code. The next item to consider would be pre-tax deductions. Examples of pre-tax deductions for federal income taxes might be 401k or cafeteria or 125 plan deductions. So before calculating the taxes to withhold, determine which of your deductions are going to be pre-tax for which tax code. And today, since we're looking at federal income tax, 401k and cafeteria plans are going to be in our calculation. Again, if you set up any new deductions, check with your state and local agencies to confirm which deductions might be pre-tax for state and local. And the next item we'll discuss will be employer-provided taxable benefits. This would be anything provided by the employer that is of no cost to the employee, but could be turned into cash, like maybe gift cards. That would be a taxable benefit. Taxable benefits do not increase gross wages, but they do increase taxable wages. Some of you may know this as imputed wages. Some of you may have seen other older payroll systems actually pay these as wages and then turn right around and deduct these back out to take them out of gross but increase taxable. Some examples of these might be country club membership, group term life over $50,000, and again, like we mentioned, gift cards. Again, we're talking about federal income taxes today, but also remember state and local taxes. Always check with those agencies to see what's going to be taxable. In all of your Optimum applications, the equation to calculate taxable wages is always the same. Gross minus pre-tax deductions minus non-taxable wages plus taxable benefits equals taxable wages. And you might want to jot that down. You're going to see it repeated on many of the slides that will follow this one. But this is always the equation to calculate taxable wages. Now, you may not always have each one of these pieces. Perhaps you never pay non-taxable wages at your company. That's fine. Our example includes that because that is always part of our equation. No matter which platform of Optimum solutions you have, this is going to be the equation to calculate taxable wages for every tax code in your system. Here is the example that we're going to work with today. Our gross pay is going to be $1,963.58. Our pay frequency is biweekly. And the first thing we'll look at are our pre-tax deductions. We have 401k at 6% for a deduction of $288.46, a medical 125 cafeteria plan deduction of $200, and a health savings account deduction of $57.69. So that gives us total pre-tax deductions for federal income tax of $546.15. So that's our total pre-tax deduction. This employee actually does have some non-taxable pay. We are reimbursing him for mileage, and that mileage reimbursement is $40.50. And he is also getting a taxable employer benefit of $50 for a country club membership. Now that's not gross pay. We're not giving him $50 that he can cash at the bank, but we're giving him $50 towards a country club membership. So that is a taxable benefit for him. That does increase his taxable wages. So to determine the pay period federal taxable income, here's our equation. Gross of $1,963.58 minus pre-tax deductions of $546.15 minus non-taxable mileage reimbursement of $40.50 plus taxable country club membership benefit of $50 gives us taxable wages for federal income tax of $1,426.93. That's our taxable wage for this pay period for federal income tax. So we want to take that amount and go to Circular E to find the annualized percentage method table to find the tax rate. Now, each one of you probably already has a Circular E on your desk or has it bookmarked on your favorites on your computer. If you don't, I recommend that you get a copy or bookmark that. Here is the link to the Circular E. You can always go to irs.gov. You can jot down this address. We are recording the webinar today so that you can visit this, you can review this webinar at any time and snag this address later if you don't jot it down today. Simple enough just to go to irs.gov and search on publications for Circular E. But we're going to go to our Circular E and look at the tables that we need to do this calculation. Now, if you'll recall on the W-4 that this employee filled out, he only elected one deduction, so we're going to use the annual standard deduction. And if you'll look at the annual line on this table, you can see that the annual deduction is $4,050 for one withholding allowance. That is going to be the deduction that we're going to take. Now, if an employee claimed 0 instead of 1, we would use no standard deduction amount. We need to annualize our taxable wages. So our federal taxable from our calculation was $1,426.93. To annualize that for someone who's getting a biweekly pay frequency, we'll multiply that amount by 26 pay periods for an annualized wage of $37,100.18. Then we'll subtract our one exemption, the $4,050, like he asked on his Form W-4 for one exemption. That's $4,050 for one standard exemption. And that gives us a total of $33,050.18. That's the result that we'll take to our Circular E percentage method table to determine the tax to withhold. That $33,050.18 falls between $11,625 and $40,250 on our percentage annualized withholding table in the Circular E. And so that's going to be the percentage to use for the employee's tax calculation. You can see the line here on Table 7, the annualized table from Circular E. There's the $11,625 to $40,250. There's an amount of tax to withhold plus a tax amount of 15%, and then an excess over amount. We're going to use all the amounts on that line to perform our tax calculation. So we'll take our federal taxable minus the excess over on that table that we just looked at. Our federal taxable annualized was $33,050.18 minus the excess over amount from the table we just looked at. And that excess over amount was $11,625. So that gives us $21,425.18. We'll take that result and multiply it by the 15% tax rate on the table above, and that gives us a total of $3,213.78. We'll use that result and add it to the tax amount from the table above, $932.50, for a total of $4,146.28. That's our annualized federal withholding amount. To divide that annualized amount into a per pay period amount, we'll divide that by 26 pay periods per year. So $4,146.28 divided by 26 pay periods per year gives us $159.47 per pay period for federal withholding. That's the last step, step number 4 there in our calculation. Now that's the manual calculation. Here we can compare it to a check that ran through that calculation in your Optimum computer system. Now if you were to compare this check to your manual calculation, you should see the same amount. There could be reasons why you might see different amounts. For example, if this employee had elected some additional withholding, you could possibly see $169.47 here if this employee had elected to withhold $10 additional withholdings on every check. I'll have customers call me quite often and ask why this employee's tax is $10 too much, especially when you see a nice round, even difference, $10 or $20 or $100 too much being withheld. The first question that I ask them is go to their tax screen and see if they have any additional withholdings elected. And usually that's what the difference is. So after you've done your manual calculation, if you see any difference, first check to see if the employee has elected any additional withholding. Usually that accounts for the difference. All of the tax calculations in your Optimum system will begin by using this equation that we've discussed today. And then they'll take that equation and combine that with the source material provided by the tax agency. Today we used our equation and combined it with the Circular E provided by the federal tax agency. You'll use this equation and combine it with your state and local tax agency material to perform their calculations. Then you'll use the calculated amount in your tax reporting, your 941s and W-2s, your state and local reports, and you need to be able to prove the amounts that were calculated and know how to make these calculations. That's one of the most basic payroll functions that there is. Remember that your 941 will need to match your W-2s. You'll need to be able to reconcile every quarter. Reconciling every payroll is even better. If your 941s don't match your W-2s, then the IRS and the Social Security Administration are going to let you know that, and they're going to ask you why. So you need to be able to explain these calculations and understand how they are performed. There are other scenarios that we haven't discussed today. For example, supplemental taxes, supplemental wages, and supplemental tax rates. And we plan to provide additional webinars in the future. We hope you have learned some things this morning. We hope you've enjoyed this webinar and have learned how to manually calculate federal income taxes. And we want you to be on the lookout for more webinars coming soon. And we do thank you all very much for attending this morning. This webinar will be on our website in the near future, and we'll let you know when it is available for viewing. Thank you very much, everybody. Have a great day.